Hello and welcome back to another video. For those of you who don't know me, my name is Jared, and in this video we're going to discuss NVIDIA, their earnings report that they submitted after close yesterday, where they're at in the market right now, and a few other stocks that are actively in my portfolio that I think are in need of a discussion currently this week. If you like the video, smash the like button, subscribe to see more videos. There's plenty of other videos that I've already done that have a ton of information in it. It would mean a lot if you go back and watch those. And let's get right into the video. NVIDIA posting their earnings yesterday. They beat. They always beat. Everybody's used to that by now. They had extremely strong growth, and we're talking they hit 81.6 billion. Quarter one last year was 44.1 billion. With these massive percentage growth, I believe it was 85%. They've also increased their gross margin. Their operating expenses really didn't grow that much. Their earnings per share grew pretty decently. Their cash flow is insane. And then right here is something I wanted to point out. They returned a record 20 billion to shareholders. They're going to announce an $80 billion repurchase authorization on top of the $39 billion remaining from Q1 as of Q1. And then they are going to increase their quarterly dividend from 1 penny to 25 cents per share. So they are becoming a dividend payer. This is actually quite important. And then I got their percentages pulled up here. So their revenue grew 85%. Net income 211%, operating income 147%. They're just doing amazing in their market. Nobody's really keeping up with them as of right now. The kicker on NVIDIA, they are a Mag 7. They are going to do very well for years in the future. They just don't get the price action that they used to. This is my opinion. It may be a strong opinion. You may not agree with me, and that's absolutely fine. That's why we're here to discuss it. NVIDIA is going to keep putting up numbers. They're going to keep um, growing at insane percentages. But as you can see in the pre market, they're down $2. If you're growing 85% revenue, why are you down in the pre market? Now, what a lot of people need to understand is that the price for the stock and the PE ratio are directly correlated to what investors think are going to happen. NVIDIA has been growing at such a rapid pace that eventually it has to slow down. If their end goal, the most they can ever make in a year, is going to be $1 trillion, well, then the next year they're going to make $1.05 trillion. And that's still a massive increase in revenue. However, they're not going to be growing at 85%, right? It can't continue. Eventually they're going to plateau, and then that number, the percentage number, is going to start getting reduced. They're still going to be earning, they're going to be growing at huge, but when you just look at the numbers, oh man, they used to grow 85%. Why aren't they doing that anymore? Why are they only 72%? Why are they only 65%? Now, they still have a lot of growth left, so please don't get me wrong on that. And will they hit all time highs again? I absolutely believe so. Will they break through that? They are a Mag 7 company, they have a massive PE, but I did want to show that building up to earnings, they typically do very well for themselves. And everybody prices it in before earnings, and then when they look at the earnings, they just kind of, oh, don't worry about it. It's already priced in. Well, that causes people to sell off because they bought back in here at 165 169, 170, 180, and now it's 223, and with a 52-week high of 236. And they're willing to sell off and pull some profits to those who are willing to buy because of their earnings. Now, if you bought right now today or yesterday, are you going to end up making money on NVIDIA? I would think so. Am I currently actively buying the stocks? No, I wait until after earnings because I like to see what NVIDIA does after earnings. Typically, they go on a downside. And another down factor of NVIDIA is China. Without clarity on China and them being able to sell their chips to China, that alters how much money that they can actually make. That's pure profit when they can sell to China, and that affects their bottom line. If they open it up to where they can sell their chips directly to China, then they're gonna continue growing at incredible paces. But if they continue having these issues, SMCI up here, they ended up getting a couple of their leadership team ended up getting busted bringing chips into China, then that causes the semiconductor sector to suffer because that's a huge country that would love to buy all these chips and it would increase their bottom lines. Amazing. So is NVIDIA a buy? I believe NVIDIA is a buy and hold. It's always going to be a buy for years to come. They got growth ahead of them for 4 or 5, 6 years that is going to be unprecedented. They're the first ones to do it, and they're going to continue. Do they have growing competition? Absolutely. Will they be higher than today? Absolutely. Will they end up being a 350 stock? I actually believe so. Is that going to happen at the end of the year? Probably not. Is it going to happen in 2 years? Maybe. And yeah, no, NVIDIA is a strong company to buy and hold in your portfolio. Their downhill swings are not as massive. You're only talking 30, $40. Their uphill, sadly, is not what it used to be on some of these major rallies that you had. But every time that major rally seems to happen, they drop down pretty consistently. Once again, all that future growth is priced in already. We're going to move on to our second stock, which is going to be Adobe. I know the SaaS apocalypse is still in full effect and full swing, and I don't understand it. That's absolutely fine. It's something for me to figure out, but I'm going to continue buying these SaaS companies while they're at these low of a valuation in their stock price. And Adobe, I just want to take a look, and Palantir is going to follow the same chart. CMD, ServiceNow, they're all doing the same thing. They all had these low back here on April 10th, and then they had another pullback on the 13th. And they're all following the same trend. The whole sector is moving because people are treating the sector as the black sheep. And I think people's got to start realizing that AI is not going to remove Adobe. It is not going to remove ServiceNow. It's not going to take away anything from Salesforce, in my opinion. In my opinion, they're actually going to grow and they're going to utilize AI and they're going to scale their business to the next level. Every time you use AI to edit a photo, it's going to use Adobe. Well, guess what? Adobe gets part of the profits. So they're actually opening up the opportunity for these companies to grow even further. And I believe people are not actually paying attention to that. They're implementing Adobe into like Anthropic and other companies like that. And it's only going to start paying off. Now, has it yet? Absolutely not. Adobe's been doing really well, all in all. I wanted to go to the dividends and earnings. 13% growth year over year, 11% quarter of the same year, previous year. Though that's great. They're double digits growth in both of them. and they're reporting earnings June 11th. They did report earnings on March 12th, which is fine. They did beat, and I did want to point out their PE was right there. Their PE, they are down to a 14.76 PE, and their 5 year average was almost 40. We're talking about almost 3x from here. And that's where the pricing is happening. With this kind of growth, in reality, there's no reason why Adobe's not at an 18, 19, even 20 PE. And that's where they should be around, which is going to be a massive change from where they're at today. And so you already got some price built in, equity, you could say. But let's go into statistics, and this is something I wanted to show you guys about Adobe. We're going to go into their financial statement, go over to their income. They've been growing every quarter. Cost of sales, cost of goods has been going up as well, but not at a huge clip. Their gross profit's been going up, and their net income has been growing, which is exactly what we want to see. Now, there was a little bit of a hiccup back here, but that was kind of where everybody was kind of starting to um, spend a lot more money on AI and AI capabilities. But I did want to point out their cash flow. This is what one thing that we love to see is they went positive cash flow. They're keeping more cash on hand and cash equivalents. That's huge for a company, especially when there's so much speculation as to if they can survive the AI race. If they're starting to set cash to the side, they're building themselves a moat and allowing themselves to not be touched because that gives them the opportunity to buy other companies or price their way into better deals because they're not hurt. With that being said, I do believe Adobe's a buy. They are, I have quite a bit in my own portfolio, and they're hovering right around this range in the 244.8. They did break up above it already in the pre-market. We're coming down to meet it again. If we break down to the bottom side, we could go as low as this 229.56. If we drop below that, you don't have a resistance until 209. Chances of us staying below it very long, more than a day, is very slim. And I do think the bottom of the barrel it's got to be right there. We've been scooping water out of this SaaSpocalypse barrel for a while now, and it's got to come to it. It's got to be right there. So Adobe is a buy. NVIDIA is a buy. A little less profit to be made in NVIDIA unless you hold for the severe long term. I think there's better opportunities out there myself. We're going to go into SMCI, Super Micro Computer. They're hovering right around this in between these two resistances, 33.55 and 31.17. You can see we're already down in the pre-market slightly. It's very hard. Don't always trust these pre-market values. People are still waking up, so they're gonna change rapidly throughout the day. Like AMD was down like $12 to start the day and ended up positive 33. So you gotta take it with a grain of salt. SMCI, they are strengthening their leadership team. It should be right in here. Yep, they named Matthew Thurberger as Chief Revenue Officer. And I did a little bit of a background on him, just a little bit to see what his experience is. He's got a ton of experience. It's good to see that they're bringing in experience and talented leadership into their ranks, especially after everything that happened with them. And they got a lot of good things ahead of them as long as they can stay away from this lawsuit. And I do see them becoming a $50 to $60 stock here by the end of the year. That's why I'm in on them. They did have massive EPS growth over their last quarter or the quarter of the previous year, same quarter, and then very minimal growth year to year. But you do have a lot that goes into that, and that's something that you, a lot of these companies aren't going to be able to grow like NVIDIA, right? They are way smaller cap. Their market cap's only 20 billion, and NVIDIA made 81 billion in a quarter. Um, so they got more growth ahead of them, but their market cap is definitely much smaller. And when you look at their most recent earnings reports, they did end up selling less on their less net sales, less cost of goods sales, but they increased their profit. And that is a huge thing to me because even if you're making less, but you're able to retain more, that still gives you a growth opportunity that you may not have had. Their net income has still been going up, it's been tracking up. And refocusing on yourself and making your own product cheaper for yourself to create or extend or expand, that's going to be a huge building block for your company. We're going to move right into Palantir. SMCI is a buy. I would continue buying them even with the lawsuit going. I think they're going to fend off the lawsuit pretty well. Anything under 40, I think SMCI is a pretty good buy. All right, moving into Palantir. Palantir is kind of an odd company to cover because they're kind of a mix in between a couple of different companies, them being directly correlated with security and defense and AI. Um, they got a lot of Department of War contracting. They have a huge PE ratio, and but Palantir, I believe, is doing a lot of really good things for themselves, and they're growing at incredible paces still. They are hovering right around a resistance around 135.96. We are right below it in the pre-market, so we're going to be bouncing around that resistance again today. When we drop down below 135, that's when I pick up call options, and then when we get back above 155, that line of resistance there, that's when I start looking to sell my options. So I was able to do it back in here pretty successfully. I was able to do it right in here pretty successfully. And we're setting up again for me to do it again. However, our highs are on a downhill trend. So we really do need a surge forward to be able to break through our current charting and see where we can go from there. Uh, their earnings per share, they beat pretty much every single time. Their growth is astronomical, 286.96 year to year and 325% in the quarter of the previous year. Their PE is 154.1. Now, that makes it a little tricky because when you guys are looking at PE, you're pricing in future growth. So if they're continuing to grow, then that's a low PE because then obviously their price will go up and that causes the PE to be reduced drastically. Now, if they start to plateau, kind of like what we believe NVIDIA is going to do, then that would change things incredibly, meaning it's overpriced. Now, do I think Palantir is overpriced? I do not. I think they're going to be in between that range of 120 to 200 that I've been talking about. They kind of keep bouncing around. I'm almost thinking it might be about 180 instead of 200. Trying to get a little bit more exact on it, but the numbers don't lie. Their sales go up. Their gross profit's insane compared to their sales. Their cost of goods is like nothing comparatively, and it's not really growing. I mean, the last quarter it stayed exactly the same, and their net income is just becoming monstrous, and that's fantastic to see. I'm excited for any of their earnings. I think they're always going to report good earnings for the future to come. Now, their cash, they have been correcting. They actually got some cash on hand, which is awesome to see as well. Their next earnings report is going to be August 3rd. They just reported on May 4th. August 3rd, that will be an exciting time. I think they will grow all ahead of time. I won't be surprised to see 160, maybe even 170 before they report earnings again. At that point, I'm gonna sell off most of my call options. I might keep one or two just to see what they do during earnings as a risk, but that is high risk. So please be careful and make sure you're doing your own research before you do that. All right, we're gonna move right into Big Bear AI. Big Bear AI has been a buy for me for quite some time. They're doing really cool things with their airport security and scanning technology, and now they're moving into Panama, where they're going to be scanning cargo. They're going to try to increase the amount of cargo that can actually be checked by security as it's passing through the Panama Canal. Now, the Panama is the dry cargo. The dry cargo going through Panama Canal, there's a huge amount of it, and they're the first company to start utilizing it. So it's going to be a proof of concept in a way that if proof of concept, uh, if it runs and it does very well there, then it's going to grow and expand. And then it could be in all the ports, it could be in all the railroad stations, all that kind of stuff that is just going to cause a huge amount of growth for Big Bear AI in the future. That's what I believe anyway. They didn't talk about numbers about what was going on in Panama, so we have that to say or to see. When I do figure that out, I will do another video just on that itself. But Big Bear AI is in between this 409 and this 393 resistance. They've been bouncing around in there for a while. They were back in it over here. They had massive growth to the upside. They were back in it here. So it is a very strong resistance channel in this range that we're trying to break out of one way or the other. And I think it will be to the upside. So we're going to take a look at their overview real quick. They don't have a PE ratio because they're net positive yet. As you can see, they did have one earnings, Q3 of 2025, where they actually reported a positive EPS, but they did miss on the last earnings call. They have very solid growth as of right now, 26% essentially year over year, and then 98.18 of last quarter to this quarter, or the same quarter last year. And we're going to go into the statistics here and financials, income statement. They were growing pretty consistently. They've kind of stagnated a bit, but their gross profit, it's been going down. There's a lot of hope for me. Their net income is back to negative. They actually showed a little bit positive in that Q3 quarter. I think they're just needing things to start paying off. They're growing, they're trying to grow. They're not a huge company when it comes down to it. That they really need to concentrate on and spend money. As you can see, their assets total have been growing pretty consistently. And that's exactly what they're going to keep doing. So I would look at Big Bear AI probably by the end of the year being a $7 to $8 stock. That's almost a double up from where they're at today. I think they're going to hang out in that range for quite a while, like they did the 5 to 7 here. And I do see them becoming a $7 to $8 stock pretty consistently. Eventually, they will break that $10 mark that they've been hunting for. They hit it one time, just barely above it. There was a lot of hype and speculation around it back then. Obviously, it crashed right back to less than what it was before the rally. I think they got a very bright future. AMD. Okay, so AMD. This is a good one to talk about. Everybody loves AMD right now. They're doing awesome. They got the 450 series coming out later this year. Lisa Su's doing great things. She's kind of keeping that guidance a little low, and she always beats on guidance. So there's a lot of good energy with AMD. Now, if you watch my previous couple videos, I've talked heavily about AMD and what I'm doing with AMD. I have sold all my call options. Again, I bought two more. I bought them back in here, and then I sold for a profit of about $1,600 for the two options. I'm fine taking that risk off the table and making that money and moving on. Back here for $3.99 is what I ended up hitting. Obviously, it dropped a little bit lower 2 days ago, but at $3.99, I bought 10 more shares. At $447.50, I sold those same 10 shares. I only profited what, $447.50 minus Fidelity's fee. That's kind of negligible, but I was able to sell those shares again ahead of NVIDIA's earnings. Now, it's always risky, even riskier, to trade during earnings for earnings. But as you can see, pre-market, they're down $12 or 2.7%. Do I think they're going to stay down all day? Absolutely not. I think NVIDIA is going to end up positive, barely. And then I think AMD is going to end up probably being negative a little bit. Just a small retracement and to gain a little bit more bearings from its massive growth as of yesterday. Now, where do I see AMD going? AMD is going to be a $500-600 stock. I don't have a doubt in my mind as that it is going to happen. Now, when is it going to happen? Is it going to be this year? With the 450 series, I'm going to probably say yes. My best guess would be it's going to be a $500 stock. Now, if you asked a typical American of going up to a slot machine and putting in $450 with only a chance to win $500, most of them are going to pass on that opportunity. AMD is going to have growth for years and years. And the only reason why I'm not actively buying again and I'm still selling is I'm going to buy on the downs. Would I rather pick up AMD at $399, $400? Absolutely. Do I think we're going to have many opportunities ahead of us to do that? No, I do not. Are we going to see a retracement? Absolutely. Are we going to go to all-time highs again? Absolutely. When? Couldn't tell you. Not many people can. There's a reason why it's stock market and there isn't just one or two millionaires that or trillionaires that control all the money in the world. Because if they could tell you exactly what day, that means they can see the future and they would have all the money. With that being said, though, AMD is still a buying opportunity. Just make sure you're buying for good pricing. Don't pay at the top. It's hard to not. Will it be higher than it is today? Absolutely. So even if you do pay at the top, are you going to end up making money on AMD? I do believe so. Just be careful with what you're doing. Do your research. Make sure you're buying at a good value to you and go from there. Hope everybody's enjoying their investment journey. I know I am. It's been great so far. I've made a ton of money. Still got to pay a bunch in taxes. Everybody does. We'll have to pay a bunch next year, too. The tax man is going to love all of us who are following any of this advice or anybody following any solid advice from YouTube or doing your own research. With all that, I hope you enjoyed the video. Smash the like button, subscribe for future videos, and I will see you in the next one.